Yo guys, what's going on? Me again. Um, I promised a few of you a quick video around the sort of three different POIs that I personally use, and my theories, reasons, whatever you want to call it, for for using them and why I favour a couple of them over one of them. Um, so I use PIs that I call sponsored candles. Ones that call KFC's Kung Fu candles, IFC's, FU's, whatever you want to call them, same thing. And refined order blocks. So my favourite, the one I tend to try and look for in a setup is a sponsored candle. That would be one like this, a buy before a sell that is full bodied. You can see here that it's a lot more body than wick. This one, has a couple of ticks of wick compared to like a 3-pip body or whatever. And it takes out liquidity here, and it also mitigates this. So that's what I look for in it. That it is more body than wick, takes out liquidity, and ideally mitigates something. Doesn't have to, but that is much more preferable for me. They seem to be more HP through my testing, and also that it breaks structure afterwards as well. So with these, I tend to find through my testing that price will come to the 50% of them, the equilibrium, whatever you want to call it. So I always use the EQ of these candles. My theory would be that because most of the volume is held in the body, that it wants to come and mitigate the 50% for whatever reason, liquidity, filling orders, getting out of drawdown, whatever you want to call it. But yeah, that's a really, really clean example of a sponsored candle. So one more time, just a buy before a sell that's more body than wick and takes out liquidity and ideally mitigates something as well. And I always end them off to 50%. The next one is KFC, FU candle, IFC, whatever you want to call it, right? So very similar to a sponsored candle, although this one can, or not even can, tends to be more wicky. Not so much body on it. I mean, this is an extreme example where there's literally no body on it, but you can see here that this takes out this set of equal lows. So again, that's something I look for, it to take out liquidity and then cause a break of structure, leaving imbalance. And again, ideally mitigate something. Doesn't have to, but it's always preferable if it mitigates something. It's just showing that build up of orders, right? So obviously price has broken structure here, left this set of equal lows. This would be the sort of area that caused the break of structure. So then price comes down, mitigates this area, something in this wick, takes out the liquidity resting here and then breaks structure. For these, because they tend to be more wick than body, I will always just take the open like this. I won't ever take the equilibrium of these candles. I only ever do that with sponsored candles. Again, it's the same sort of theory. Takes out liquidity. Ideally, you should have resting liquidity above it as well. That always helps, showing that price has got something to tap into and then shoot off the other way, basically. And then refined order blocks. So this is an extreme example, obviously, but this is sort of the reason I don't. If there's an SC or a sponsor candle, I will always go to that unless something is telling me not to. Ideally, you want the refined order block to have left in balance, all that sort of stuff. So in this case, for example, look, we have one refined OB here, this one. That price just goes straight through. We have this one that again price just goes straight through. We have this one down here that again price. Well, this is the one that price reacts to, And then we have this one down here, which leaves the imbalance, right? So this is sort of one of the reasons that they're not my favorite candles. I want them to be very obvious, right? So in this case, I wouldn't know necessarily which one to pick, and I probably would have gone for this one, in all honesty, because that is the one that leaves in balance. It's got those resting equals above it, all of that sort of stuff, and would have missed the trade, which is why I tend to favour ones that take liquidity, and ones that then break structure and ideally have resting liquidity above them, because it just seems the logic behind it would be that if they've taken liquidity from there, that is where they would need to come to mitigate out of the drawdown that they're in the position, because they would have needed to manipulate the market, they being BFI, would have needed to manipulate the market to take the liquidity, so they would have a position in drawdown there, hence the buy before a sell or the sell before a buy, and they would also need to fill all of the rest of the resting orders there, which is, my logic behind it. I hope that helps out some of you guys. They're sort of three really clean examples, or two really clean examples and one sort of extreme example of the refined order block thing, and why I don't love it as much as the other ones. If anyone's got any questions, feel free to hit me up. All right, take care, guys. Bye.